Our final step in the accounting cycle is to prepare the post-closing trial balance. This is the third and final trial balance that you create during the accounting cycle. Since all temporary accounts are closed, the post-closing trial balance will only show the permanent accounts, which are the assets, liabilities, and capital. There are no revenue, expense, or withdrawal accounts. Because of this trial balance is shorter than the rest. As a reminder, the debit and credit columns need to equal. If they don't, then you know you made a mistake during the closing entry process. Here is an example from the textbook that shows what the post-closing trial balance will look like. As you can see, there are no revenue, expense, or withdrawal accounts, and only the permanent ones are left. All the temporary accounts were closed to capital. All the numbers will be the exact same as they were on the adjusted trial balance, except for capital. Since all the temporary account balances were closed to capital, this number would need to be updated. Using the same example from the closing entries, let's practice this. This is problem number 2, part B on your classwork. Prepare the December 31st, 2017 post-closing trial balance for Cruise Company. When we prepared the post-closing trial balance, we will only have the permanent accounts, not the temporary accounts. Let's take a look at the adjusted trial balance. When we prepared the closing entries, all the temporary accounts were closed. The post-closing trial balance will only show the permanent accounts. All account balances will be the same except for capital. All you need to do is copy and paste these accounts in the post-closing trial balance, but leave the amount for capital blank for now. I'm just going to copy all of the accounts from the adjusted trial balance here, except leaving capital blank. We have cash of $19,000, supplies of $13,000, prepaid insurance of $3,000, equipment of $24,000, accumulated depreciation of $7,500, and we have capital, but let's leave that blank because this number will change. There are two ways to calculate the amount of capital. One is a shortcut, and it's to find the number that will make both columns equal. But let's go about this the long, normal way of doing it. Looking at the adjusted trial balance, we can see that the balance of capital was $47,600. Now let's take a look at the closing entries. As we look at the closing entries, we see that we did 2 entries to capital. We added the income of $10,900 and we subtracted the withdrawals of $7,000 from it. This is what we need to do. We begin with the balance of $47,600 plus the income minus the withdrawals. We get a total of $51,500. This should be our new balance. Let's put $51,500 in, but let's double check to make sure we are correct. We're going to need to add up the debit and credit column and they should equal. And if not, then we either have the wrong amount for capital or we did a closing entry incorrectly. When I total these columns up, I get $59,000 for both. This means that we're on the right track with our amounts and our debit and credit columns do equal. As you can see, this post-closing trial balance is much shorter than the other ones that we've prepared.